Bitcoin broke down through support, but has since come right back up to resistance at 39,200. Today, we're going to look at the price of Bitcoin, the strength of the US dollar, and some other currencies, as well as many altcoin charts to get a feel for what the market may be telling us. Congratulations if you are here. Literally, price action in crypto is very, very boring, and yet you are here. If you notice, general views on videos is down, but you're here. This is probably because you know something that a lot of people haven't understood yet. That being here when it's boring and price action is boring and the market is down is the very, very best time to be here, and you're here. So you know something, and congratulate yourselves for being here. It's really only 5% of people that stick around during these hard times, and they're here when it's the best time to be here. When things go crazy, great time to be selling. Welcome to the Crypto Rain channel. I am your host, Jay Rain, and if you like money in crypto and you're looking for a real investor's take on the crypto market, join the Rainmaker family. You can do that simply as liking this video and subscribing with the all notifications bell enabled. Special note, myself and Paul, we're not financial advisors. We are crypto investors ourselves. Paul invests in very many things. And we do want to thank our Patreon members. We do have a private Discord there Patreon members get access to. So make it rain on that like button. Strap in for the show, and let's welcome Paul from DeFinity. He's going to join us. We're going to look at some of these different markets, including Bitcoin and some altcoins, but also what's happening with currencies around the world, because it gives us some indicators on how Bitcoin is doing relative to that. Paul, thanks so much for joining us.
It's always my pleasure. It's a great time to be here. And I think your intro was spot on. Success is 80% turning up, as they say. And the fact that sort of 95% of people lose in trading and only 5% make money says a lot. You've got to be here all the time because when the opportunities come, they come fast. And so this is all part and parcel. So it's a great intro. But yeah, the markets, broadly speaking, are really interesting. And we tend to find that they go in a rotation. So sometimes it's the stock market that's looking really interesting. Sometimes it's the currency market that looks really interesting. Sometimes it's the bond market, and sometimes it's the cryptocurrency markets that are just going absolutely crazy. So it's a really great idea for whoever is investing or looking at anything in the markets to look at a big picture, look at everything. And I don't mean literally everything, every single stock and every single market around the world, but just have an idea of where currencies are going, where commodities are going, where equities are going. And it can help you kind of put together a global picture of where money's being moved around. So you tend to see when these cycles come into play in the other markets. And then you get to see technical things that repeat from one market to another. So it's a good exercise to do that.
Yeah, no, I've had a theory for a while that stocks were topping out, and at some point they would reverse this huge bull trend that they've been on for forever. And that when it reverses, at first the crypto markets might do poorly. But then if the stocks continue downwards or equities continue downwards, that people might see crypto as a better place for their funds and sell their equities and roll more of that into crypto. Now, we're not sure if this is all going to play out. We're partway through that, though. The equities market has seemed to reverse. At least it's had a really big pullback. Paul, do you mind if we pull up the NASDAQ? I particularly wanted to look at the tech stocks index.
Yeah,
NASDAQ.
Absolutely. I mean, what I'm thinking is a broader strategy, and I'm quite willing to be proven wrong, is that potentially what's been going on is we are close to the point of when inflation could get out of control. That means that the Fed aren't going to raise interest rates quick enough. But in order to make them not raise interest rates quick enough, we need to see the equity markets go lower. And then they have the excuse not to raise interest rates, but that keeps inflation going up in the background. So that's my core case. I think you will see a lot of inflation, but that could be driven by, cryptocurrencies going up, but also the equity markets eventually going higher. So, but for the moment, the play is that equity markets have been weak, and the NASDAQ has, it bounced off this support, which was massive support, 38.2% retracement of Fibonacci number. And it had a really good rally. And I think we had a question from a viewer saying, which way is it going to go? And around here, it was still 50-50 really as to whether it was going to go up or down. I was leaning towards the inflation side, but the fact that the dollar was getting stronger and stronger and stronger means that these companies are going to earn less from their overseas earnings. So that's always going to put a brake on the equity markets generally. Also, we've got the end of the pandemic, which is another thing that hits some of these tech stocks, and the chip shortage isn't helping either. So there's a few sort of ill winds that have blown towards the tech market, but technically it's broken this really important support here, and it's starting to go lower. Now the next support level that we've got in the Nasdaq would be around this it's 11,778 would be this particular target, but I have to say that it could easily turn around before then if we get a much more friendly response from the Fed. So, but for now, I wouldn't be standing in front of that at all. And another thing that we look at is the Vix Index, which is the volatility index. And when this rises, it shows us that it's almost like a fear monitor. The higher this goes, the more scared the market's been. Now, it's been much higher before. So during the pandemic at the beginning, this went all the way up to 80. It can only go to a maximum of 100. So you can see how high it was then. So relatively speaking, it is still extremely elevated, but it's nowhere near the high that we saw when we got the pandemic panic in March last year, or in March 20. But this could still break higher. Well, that remains to be seen. It's definitely been elevated for a while. So it just shows you that the market is quite nervous. And what drove the market up was the Nasdaq. And what seems to be sort of pulling the market down is the Nasdaq too.
Yeah. So we were having a little bit of a discussion before we started this video. And we were talking about the strength of the dollar and, interestingly enough, the strength of a few other currencies. And you were talking about risk-off assets. I wonder if you could explain that to the audience, what you were saying about the U.S. dollar and the Swiss franc, and sometimes the Japanese currency, the Japanese yen, as risk-off assets, and what that means.
Yeah, absolutely. So in the world of foreign exchange, if you could think about, I suppose in the world of cryptocurrencies, you have places where you can get yield. And that's exactly the way the currency traders think of the market. So certain currencies are known to be risk on assets and some are known to be risk off assets. So if you look at the Swiss franc, it has relatively stable economy. So it offers relatively low levels of interest when you can't get much interest from any bank or any country at the moment anyway, but that is changing, of course. But the relative rate of interest is very low in the Swiss area, and it's a very stable economy, and it's also very neutral. So when people panic, they tend to move money into the most safe haven place, as it's known. That would normally be the Swiss franc. So you get very little return on your money, but it's very safe. Whereas if you wanted to take some risk, you might put it in the Australian dollar or the Canadian dollar that is being run or being influenced by commodity prices. So, of course, in a bullish market, those commodities go up. There's more demand. There's more activity in the economy. But their economies might not be managed quite as well as the Swiss. So the amount of interest they pay is much higher. So if you're earning on one, and you're earning a higher rate on one than you are on the other, as long as the currency is moving in your favor, as long as the currency rate is moving in your favor, you will make money. Now, when you start to get a bit nervous and you think, I want to take some money off the table, you'll be selling the riskier assets, i.e. the commodity currencies, and you'll be moving into what could be the more stable assets. And the Swiss franc and the Japanese yen and their stability, as well as the US dollar, are known as risk-off assets, whereas pretty much everything else outside of that, to a certain degree, is a risk-on asset. So if we look at a chart of the dollar against the Swiss franc, it's really interesting that in this current environment, we've seen a straight line move to the upside. So I also want to show you something that is interesting from a technical point of view, because I'm not saying that this is definitely going to happen, but if you look at this is the dollar against the Swiss franc, and it broke this resistance and just went straight up. So this was something I was monitoring for a breakout. But if we also look at the US dollar against the Canadian dollar, and look, I just want you to look at this chart pattern, you can see that it looks very, very similar, but there's a difference in time. In other words, it looks like the Swiss franc is up here, but this hasn't actually moved yet. So what I'm interested in seeing is things repeat. And that's why I like charts so much, because if this breaks this high, it could easily start to squeeze up much more aggressively, and then we'll get a repeat. And, the move could be as fast as this. So there's good what we call risk against reward against taking a position. Now, we might be wrong, of course. Anybody can be wrong, but at least we know where we're going to be wrong and the trigger levels to get into the market move. And that's what technicals is all about.
Yeah. Now, we've had kind of an ongoing discussion about the strength of the US dollar and how that tends to make cryptocurrency do worse, at least to high-level traders that are investing funds and they trade cryptocurrency much like a currency itself. Can we look at the strength of the dollar, and would you share the implications that often has on Bitcoin?
Yeah, I mean, this is a chart of the US dollar index. So this is like the share price, if you like, for the US dollar. So it's the US dollar against world currencies. It's a basket of currencies. Now, the biggest element of that is the euro, and the euro has been weak. So that's why this is moving up in a straight line. Now, very short term, this pattern here is what I call a pennant formation. Now, you might see other people call a pennant formation or flag formation some really volatile range of price action. To me, that's not really correct. It has to be really tight and right near the top of the range or the bottom of the range if the trend's going down. So here we have a very good pennant formation. So this actually should squeeze up again. So despite it being really high, I think this is going to go straight up. Now, I could be wrong, but the amount of times this has worked is, it works more often than it doesn't, and we shall see. So it should really power through this prior high. So it's the highest level we've seen since January 17. And I'm not saying that it's impossible for it to go up and then come back down again, but the short-term move does favor a breakout to the upside, and it could be very sharp. And this is where people who use things like RSIs get caught out, because the RSI is like an oscillator. At the moment, it's reading very high and it's saying sell, but you wouldn't sell this on the basis of the price action. So the price action is saying it could potentially go much higher, and you shouldn't be reading the RSI in its classic form, which says if it's reading more than 70, it's over, inverted commas, overbought. But that's a mistake. You have to look at the context of what the market is doing. Now, in relation to what's going on in Bitcoin, there isn't a one-to-one relationship, but I personally just think that if the dollar is strong, then the impetus for people to put money into Bitcoin will be less. So it's not going to help, but there isn't a direct correlation that says when the dollar is strong, Bitcoin is weak and vice versa. They can both exist in an upward trend and both exist in a downward trend. But I personally think that this is putting pressure on Bitcoin. It's not helping it. And we will see the big move in all the crypto assets when this final dollar move is complete and it starts to turn back the other way, which it could do, very aggressively. So the market shifts too much to one side. Everybody buys near the end of the trend, and then the market turns. So possibly when everybody else is bullish, we'll be sort of talking about how it's ready to go down. So I think Bitcoin can still go higher, but it has this kind of heavy weight holding it back a little bit. And it may just keep this consolidation going that's been going on for quite some time until the dollar weakens, and turns this trend back around the other way.
Now, why would the dollar strengthening versus other currencies, would you share why that would put negative pressure pushing down on Bitcoin's price?
It's just a question of competition. So it's like the market is out there to have competition for your assets. So if I'm a fund manager and I'm looking at the world assets and I think, well, where should I put my money? If Bitcoin is going sideways and the dollar is rising 1% a day, then I'm going to put my money in the dollar. And also, it's it's one of the safest places in the world to put your money. So I know some people would argue with that, but it's one of the key places that you would hold your money until, of course, the way all governments have been printing money has not been good at all, and that will eventually come back to hurt them. And that's why gold and crypto assets are such a great development, because it means that the problems that they're creating, you can protect yourself from by hedging with these other assets. But at the moment, the dollar being strong is just a competitive element in the market that speculative funds would decide whether they want to buy it or not. So, if you can imagine somebody said to you, okay, here's 100 million, invest it in the market. Well, you say, okay, Bitcoin's going nowhere at the moment, but the dollar's going up, so I'm going to put it in the dollar. And then you might come out of that trade and then say, okay, now it's time for the dollars to go down. I'm going to move into Bitcoin. So it's really just the relative strength, and it's also putting pressure on gold. See, people will want to hedge against the US dollar being weak by buying gold, but the dollar isn't weak, so that's why gold isn't really performing very well at the moment, even though there is a war, and even though people are talking about nuclear war and things of that nature that would normally send the gold market up by $500 or even $1,000. I think those things will come, not nuclear war, hopefully, but just a big move up in gold and silver and crypto assets. But that, again, will be on the basis of the monetary debasement that's been going on that will favor any hard assets and also anything that basically isn't the dollar.
So once this rise in the U.S. dollar stops and the trend reverses, what you're saying is a lot of that money will reverse into other assets.
Yeah,
and likely
absolutely.
Some of those assets would be Bitcoin, gold, and silver. Can we pull up the Bitcoin chart?
Yeah, absolutely. Yeah, and that's exactly what I'm thinking. So I think that there's capacity for Bitcoin to continue in this range. And we've talked about this range for a long time, and the market down here was extremely bearish and expecting it to go lower. And I've said, despite the fact that the dollar's very strong and it is a kind of an anchor or an albatross to a certain extent, Bitcoin has just gone sideways. Now it's traded towards this trend line, and I've been looking for an interweek rally, and I've been wrong. It's been relatively under pressure, but it's held this trend line. It's above the trend line, and it started to rally today. Now I don't know whether that's going to stick or not, but at least it's holding over this trend line. And so I think it will consolidate for a while longer. Now, if that trend line breaks, we're going to go to the next one, which is this final sort of line of defense. And if that goes, we could be looking at a move to 30,000. But I still think that this is all a correction. And obviously we have to break these lines first before we can talk about these downside targets. And it hasn't broken it. So those aren't on the table for the moment. So I'm still expecting this to either go sideways or sort of drift up in the week. But we can't sort of press the button on a major upward phase just yet until a few things fall into line. And I think the dollar needs to punch itself out in this trend while this consolidates. And then when it does that, maybe it could be this month, it could be next month, I'm not sure. But when that does happen, I think we will go into a more what's called impulsive trend, and we'll be back into something like this sort of price action moving to the upside. Now, it'd be great if it happens now. Right against the trend line would be a very good place. And as you said at the top of the show, there's less people interested in the crypto market right now, and that's a really good time for it to rally. So, watch this space, basically.
Yeah, like I've encapsulated that overall feeling as buy when it's boring. And right now the market's feeling very boring. Do you know when it felt a lot like this? was July of last year when the price was bottoming out. And so that was really interesting what you shared about the dollar rising so much, putting downward pressure on Bitcoin, and how it's so far held those support levels and hasn't blown below it. I was wondering what was creating so much additional pressure downward on Bitcoin. When you said that, I was like, that's the key that I've been looking for. It makes sense now. And then likely when the dollar reverses, then these big fund managers are going to be looking for other assets to put their money into out of the US dollar.
Absolutely.
And that might reverse this trend of Bitcoin going in the short term down and take it right back up.
Absolutely. And see, what you're seeing also is this, and something we've talked about on the show, is this rise in yield. So this is 2-year government bond yield. So 2 years out, and we're heading towards this 3% level, which is an extremely important psychological point. So interest rates have been going up, which means that traditional money, if you put it in a bank as opposed to putting it in or investing it in riskier, inverted commas, riskier assets like altcoins and cryptocurrencies, so the banking system is trying to attract money. The bond market is trying to attract money, and it's doing that by raising interest rates, saying, look, come over here, we're going to give you a better rate. So that is an attractor that has been working against the cryptocurrency market as well. So yields rising is a competition, and the fact that yields have been rising is another factor that's been driving the dollar higher as well. So not only are you paid by holding dollars, you're actually getting more interest as well by holding dollars as well. So again, that has got potentially more upside, but we are reaching some critical points. So I think around 3% in the 2-year and around 3.25% in the 10-year. The 10-year is usually used for mortgage interest rates, which is why it's so important for households and for businesses. But it's still a relatively low number when it comes to potentially what inflation is. So if inflation at the moment is really 5% or 9%, you're actually losing money by holding a bond, because the value of it, if you hold it to maturity, is you're only going to get at the moment 3%, but actually inflation is much higher than that. So the difference between the two is what you're losing. So this rise in interest rates and yields, which is driving money into the dollar, is continuing, and that you possibly could see a more direct relationship as to why it would affect cryptocurrencies. But at the moment, it's got a bit more upside, but it's nearing potentially some very big levels where it could turn around.
Thank you, Paul. This completes a lot of things for me, and I've been hungry to know what is pushing down Bitcoin so long, even with the elongated cycles theory. Really, May and June were supposed to be really good for Bitcoin. And here we are in May, early May. And so Bitcoin's really, and it's right down those supports. Now it's held at those supports, which is great news. But I've been wondering what's been putting so much pressure downward on it. And by extension, when Bitcoin is down, usually there's not a lot of new money coming into altcoins either. And so a lot of those are down. Do you mind if we take a look at another one of the ones that we've frequently looked at? We've been following the inverse head and shoulders with Polkadot.
Yes, absolutely. And so let's get that up there. So so this is for those of you that perhaps didn't catch it last week or the 2 weeks ago when we started to talk about it. There was a really nice reversal pattern forming, and it was early in the phase, i.e. it hadn't completed, which is part of the discipline of technical analysis. You usually wait for a pattern to complete before you talk about it, but I was monitoring it because it looked really interesting. And this is the pattern. So what you got here is a left shoulder, the head which dips below the low of the previous support. Then you get a rally right up to key resistance, which is key resistance from here and over here as well. So it stopped at 23. So massive resistance around here. Then it went down again. It should stop around this area here, which is what it did. And then it started to go up. So all the pieces were falling into place that this was going to be a head and shoulders reversal. And also cyclically, it was working as well. So potentially for May, if the timing for this had gone up and broken this level here, and got up, it would have been great. So sometimes all the pieces fall into place and sometimes they don't. Now, it stopped rallying and went sideways last week. So we gave it a little bit of room because it could do that without completely negating the pattern. But it's now dipped just too much. You know, the kind of symmetry of the pattern is gone and it's heading too close to this prior support for comfort. So we can't indefinitely hold a bullish view on something. We need to have some technical justification. So there was enough to try and buy it here, but you couldn't really hold it once it broke this level. And so I'm a levels guy. I have to look at levels where I would buy, levels where I would exit or parachute out. And at the moment, I would have to wait because it could still turn around. To me, this is sort of, 60-40 really, pointing to the downside because of the way it's failed. But it's too balanced a trade for me to even look at it. I would look at something that looks cleaner. Like at the moment, the dollar at the moment looks like a cleaner trade because it's making a very clear technical pattern. So we'll have to wait for that to do whatever it wants to do, which is probably go into this support, maybe dip below it just to stop everybody out and then turn around. That would be my guess. So we'd have to wait now on that.
Yeah, it was nice following this pattern, and sometimes they complete, and this one did not, and it broke to the downside, which may indicate, if you look at where it's gone down to, it went down to that previous low, right to where the wick is, and it's sitting a little bit above that, and then it could break even lower from here. So technical analysis and price analysis doesn't give you like a magic 8-ball that tells you exactly what the future is going to be, but it does give you an indicator, and then you're looking for good setups like where the risk to reward is worth it. And so what you're saying in this, the risk versus reward, the reward is too even. The chances are kind of even that it'll break up or that it'll break down, and those aren't the ones that we like to take.
Absolutely. Yeah. So you can give an opinion on a market because it's because of where it is, but it's like the key to it is, would you trade it and what's your conviction on it? And so you can have an opinion and say, well, it looks like it's going to go up, but that doesn't necessarily mean you have the like 70-30 or 80-20 conviction that you should have before you actually buy something or even go short. So what we look for is, and that's the hard thing about markets. A very good friend of mine who I learned some technical analysis from, he used to say that the market feels like a slot machine, and sometimes you've got to just sit and wait. And the temptation to just keep putting money in the machine is very high, and I can understand that. So with technicals, you've got to wait. But your kind of catchphrase of buying when it's boring is usually right, because this is when things bottom out. This is when they base out. And that's kind of similar to the way technicals works, because when something bases out, it's usually when sentiment is very low and nobody's interested in buying it. And so I find that sentiment matches the price action. So it sort of goes up and everyone's like, oh, no, I'm not going to buy that. I'm not interested. I like to hear that, because that means that the market is going to get caught out by a rally, or the broader market is. So sentiment is a really important part.
Yeah, it's funny how when 80% of the people turn bearish, then usually the market will go the opposite direction. So one of the things that had me concerned 3 months ago was how much of the market was still bullish. And I was like, gosh, I really want it to do really well, but gosh, 80% of people are bullish on crypto, and often it does the opposite.
Yeah.
So now we're seeing a lot of people very bearish and feeling bearish, and it's going to do terrible. Well, that's when I get excited. If it's okay, let's look at some suggestions from viewers. Now, if you have an altcoin or a chart that you want us to look at, you can put it in the comments section below, not in the chat section, but in the actual comments, up to 2, and we'll take a look at it. If you would, do us a solid and write what you like about it and what you want us to look for in it, like what's going on with it. If you just put a ticker symbol, it doesn't get us give us very much information on what you're looking for. So tell us, like, we're going to look at RFOX, like tell us RFOX and then why you want us to look at it or what you like about it, what's going on, especially if you have some fundamental news on it, on what's going on below the surface. That really helps because there are 10,000 cryptocurrencies out there. I'm familiar with a number of them and the fundamentals on a number of them, but many of them I don't know very much about. Let's take a look over at RFOX.
Right. So RFOX. Now, I'm not familiar with all of the coins as you've said as well. So, but I'm happy to look at any chart, of course. So my only concern is that I get the right one for you when you ask for them. So does this look like the right one?
Yeah, it's trading about 3.5 cents. Yep.
Yeah. So 3.5 cents. So the first thing I would say is, where is it trading in its broader picture? Well, it's right on its low of this massive range. So its range has been sort of 3.5 cents to 37 cents, massive high to massive low support. So what do we do here? I think what you have to do is wait to see whether this support holds. I mean, there's massive support down here, so it really shouldn't go much lower. But it could do. So there's not that much data either. There's a bit of data, more than some, but less than others. So we're kind of in a halfway house, really. So if I was feeling speculative and if I was feeling sort of like I had some core trades that I really liked and I wanted to sort of sprinkle some other in, I might buy this for a very short term move, looking to see whether this holds prior to getting confirmation. But I would not be holding it at all if it went any lower, because if it does, then the risk is that it's all going to go all the way down here, and I don't know anything about it fundamentally, which means I have to exit from the position from a technical point of view. So my discipline would say I would buy it around here, but I would sell it if it breaks below this 0.02. So I could maybe give it a little bit more room than that. But if I don't want to see this support here broken, see the way it wicked down like that, that to me was a really important low that I don't want to see it taking that out. I don't mind it matching it, but I don't want it taken out. So broadly speaking, it's still suffering a correction. And that trend is down. So my question is today the day it's suddenly going to stop and turn around? Possibly, but I would more like to see if I'm being cautious, I want to see a bit more evidence. So speculative hat, I'd buy it with a very tight stop. But if it was me doing it, I would probably wait.
Yeah. For me, I'd wait too, just so it's a little more clear. I do like that it's 90% off, right? So it's hit that high twice and it's come back down to this low, but we're a little bit below that low, which has me a little bit concerned. I'm going to share my screen. Yeah. Let me share my screen here. And I'm just looking at it on CoinGecko, and notice we're all the way at 3.3 cents, and it's come close to that low, but we are below it. It also put in a lower low here. And I like to see a nice rounded bottom. Tells me, okay, it is close to bottoming out. And here you see this kind of rounded bottom. That doesn't mean it doesn't have up periods. But on the second one, it was kind of rounding. And then all of a sudden it went up. So could have taken a ride from essentially 3.5 cents all the way to 33 cents. We saw on the other chart, it actually went higher at 36 or 37 cents. So that's a nice 10x gain. It's all the way back down. Now, what is Red Fox? They're building the metaverse for everyone, which the metaverse narrative kind of burned itself out. We go through these periods where things get in the narrative for a while, and the price action does really, really good. And then kind of people move on and they sell their tokens for whatever else is hot, whatever is the new thing. And so you see a big price correction. And it's come back right to the lows that we were at. Now, might put lower lows in this time. So for me, it's a wait as well.
Great stuff.
Yeah, let's take a look at Injective Protocol. Now, Injective is one that I followed for about a year, like 14 months. I covered about 14 months ago, and it did phenomenally after I covered it. And, you know, just the charts were looking really good to me. The narrative was good. And then like everything else, it kind of cooled off after March and April of last year.
Yeah, so this is a very interesting one because what we might have seen here. So let's zoom into the price action. You can see the downward trend. We'll look at that in a moment. But what I'm focusing on is something called a bear trap. Now, what is a bear trap? A bear trap is when you have really important support that breaks, the market goes short, it turns around and goes right back up again. So certain technical traders will look at a support like that and say, well, if that breaks, I will short it. You may have even heard me say that before. So they go short, but then the market goes straight back up again and you have to bail out. So you can't be short this in the very short term because of this very strong candle that's gone below the important support level at $4.20, and then it's recovered it so quickly. So what's going on with that? I mean, it's that's interesting, and there's a lot of volume there. So something's happened there, and I wouldn't be short it. Now, whether I'd be long the market or whether I'd be buying it, to use the normal parlance, is another matter. I think I would be neutral here and wait, but I'm interested by that. I think that's a really interesting signal. In order to get bullish on this, I need to see this downward trend line break. And if it can extend and consolidate in the next few weeks, it's possible that this trend line will be under threat, and then I will have a technical reason to buy it. But for the moment, I'm going to wait. But I'm very interested in what's just happened there. So otherwise, if you'd asked me like a day or so ago, and it was looking like this, without that move, I'd have to say that it's bearish, and I wouldn't be able to say buy it at all. But going from a bearish position to a neutral position is a good start. We just want to go from neutral to bullish, and we need to do a bit more work first.
Yeah, it's right about the price where it was when I first covered it, which I like this price for Injective, right around the $3 mark, a little bit above that. Its total market cap, let me share my screen, 238 million. So it looks like 56% of its supply is in circulation. It's tradable on a lot of exchanges out there. So they've got Binance, KuCoin, Nominex, Huobi, Kraken, Gemini. So it's out there a lot. It's also on PancakeSwap. It is also on Uniswap. And so it's out there on all the markets, making it tradable. So I like this one. I like where the price is at. I'm just going to kind of watch it. I'm not seeing the rounded bottom as much as I would like, but I do like this price range. If it gets a little bit cheaper again, so it hit all the way down here to 362. I guess it's at 419 today. Comes back down in that $3 price range. That'll probably be interesting enough to me that I'll pick some up.
Great.
All right, let's take a look at what was one of our other viewer suggestions?
TTK,
which one we looked at before, and I don't know tons about TTK.
Okay,
I know it's the Three Kingdoms, and
I wanted it to be the Three Kingdoms because I love that name. What a brilliant name! I wish the actual price action would look as good as the name because it just sounds so cool. But unfortunately, this is a classic case of a downward trend without any sort of support holding. So it's definitely not a buy. It's sort of a sell at the moment. And I know you might say, well, how can you sell it when it's this low? Well, the problem is I don't know how low it's going to go. So I'd rather wait and do nothing on it. I wouldn't particularly want to go short because you've got sort of asymmetric risk. There's not much more to go before it goes, there's not much on the downside, as it were. But that's really, that's where some people fall down about buying things too early. They think, well, it can only go to zero and it's not that far away. But for me, it still needs to have a technical reason to get in. That's the discipline of technical analysis. Otherwise, I would have bought it up here for the same reason, if I think it's too cheap, inverted commas. So for the moment, this still needs to work in a reversal pattern of some kind, or at least sort of have what's called a blowout bottom or a blowout top or blowout bottom is called a spike, which is basically when the market gets so one way and they panic and everybody sells, and then it recovers very quickly on that same period. Something like that, just to tell me that all the sellers have been flushed out. But for the moment, yeah, for me, it's not a buy.
Well, what I like about this one is the price has come down right close to where its ICO price was. So its ICO token price was 1.6 cents. So it's trading right around there. So my guess is going to fall below this. You see this on a lot of projects that launched, where they launched, the token price goes absolutely crazy because there isn't very much supply in circulation. Then the tokens continually get vested month after month, and those pre-sale investors sell them, because imagine selling the first bit that you got at 32 cents and you paid 1.6 cents. You got a nice 20x. And even if you only got 5% of what you invested out, you actually sold that 5% at a 20x. You got 100% of your money back out. Then next month's distribution, you sell it, and oh my gosh, you're in profit. And even though it's not 20x anymore, it's solid, say 12x, and say you got another 5% of your tokens. And so now your total position is up. This is how a lot of venture capitalists think. And so this is why often the token price will not just stop when it reaches the ICO price or even the pre-sale price. Why? Because they're already in profit. And so they sell some of the later stuff that they get, sometimes below what the cost was, because they're already in profit. And so this is just, as they think about it, more profit, and they're trying to free up liquidity, which is why what doesn't make sense does make sense to them, right? Why would you ever sell it below? Especially since if you just hold it till the vesting is done, the price will, if there's, the game is good and it's doing well, likely the price will recover and be once again much higher than the pre-sale or ICO price. So at least on this one, we're at the ICO price. It'll probably, my guess, go below it. And I don't know what, I'm here on ICO drops. I found it. So let me share my screen. So I just looked up TTK ICO price, and I saw ICO drops had it listed on the list. So they sold this. So this tells us where the token price is today. This is what the ICO price was. We don't have information on what the pre-sale price was. My guess is maybe 75% of this price, maybe 1 cent, maybe 1.3 cents, maybe somewhere in there. And my guess is they'll probably continue descending to about 1 cent. And that doesn't make me necessarily concerned about the project. This is just what the current vesting schedules on new projects often lead to. So as to whether I would buy it when it turns around, for me, it's definitely not a buy now. Whether I'd buy it when it turns around, I'd have to learn more about the fundamentals of the game and the team behind it, because there's a lot of very attractive options. Everything's price is down, and I love it. I love this time period as an investor, because this is where I like to stock up. And then I wait till things really, really get hot. And that does require a lot of patience. But when it gets hot, then I sell, right? Sometimes I sell too early because, man, all this money comes in and I'm like, oh, I could have sold. But still, following that methodology works very, very well. And what's funny is I wondered why so many people don't make money in this space. It's because so many people don't think that way. That's why.
Well, it's simple. It's really hard to do that. It's really, really hard to do that, and it goes against your kind of natural instincts, which is why it's so important to have a method. And I as you were saying in previous shows, you learned it from the real estate market, so it feels much more natural to you. The only other way to learn it is to keep watching the markets over a long period of time, and by long period I mean 10, 15 years, because then you see cycles in everything. You get used to that. But what tends to happen is people just sort of jump into what's hot now and what's flavor of the month without doing very much research. And if they make money, great, it's good on them. But it's you can make money in the markets, but the hard thing is keeping it. And the corrections are when you learn the difference between a professional trader and somebody who's just in it for a very short term. So having a long-term focus that you do is really important. It's really good advice to people to think about the long term and think about timing. And if you're positioned too big, and you can't hold the market in a retracement in something that you like, you're going to get forced out as well. So money management is also a very important element of that. If you put too much into something and you can't afford to lose it, then you're not going to make very good decisions. But if you put risk capital aside and you're willing to play with that and it won't affect your lifestyle, that's the sort of money you should be trading with.
Exactly. Yeah. Another way that I frequently say that same concept is you trade with money that you can't afford to lose. And from the standpoint of, if you invest money that you need to pay for rent or for mortgage, what if things end up taking longer than you want and things go temporarily down? Well, even if you sell, you now don't have enough money to pay rent and mortgage, which is why smart investors never use that money. They use money they can't afford to lose, not because they want to lose it, but because it gives them the ability to be patient. And the ability to be patient is what can lead to massive, massive gains, because markets turn around. Down markets go crazy at some point. And so when you buy in a down market, sometimes you're met with, oh my gosh, it went even cheaper. But that's okay if you have the ability to be long-term and wait. And then the market turns around and goes crazy. And then you're like, and then you're sitting pretty. But if you didn't have the ability to be patient because you used funds that you couldn't afford to lose and you had to pull it out, well, then you missed out on all those gains that you would have made. All right. Well, that concludes those ones that we wanted to look at. I did want to share, Dr. Stuff, my manager frequently reminds me to I ask everyone to follow me on Twitter. I'm at Crypto Rain with 2 N's on Twitter. This is me here. So with 2 N's, I wish when I created the Crypto Rain brand, I did start in like late 2017, 2018, and somebody had taken Crypto Rain with 1 N, both in Twitter and also on YouTube. So they don't use it. I don't know who has it, but so at Crypto Rain with 2 N's. Paul, thanks so much for your insights. I really want to spend the time to go into the broader market and what's happening with currencies and everything to explain to the viewers why there's been some additional pressure on Bitcoin, because that completed some thoughts for me on why there was, and I just want to share that with the audience. So thanks for taking the time to go through that with us.
My pleasure. It's always great to be here. Thank you.
All right. For those of you, if you haven't already, join us. Join our Rainmaker Army. You can do that as easily as liking this video and subscribing with the all notifications and bell enabled. Remember, no rain, no gain.
Came into the space chasing all of the gains, chasing the pumps and all of the hype trains. But like in life, shit bad before you're good. Was told to buy when it was pouring like a rainmaker should. I buy when it's down, don't chase the boats that I miss. Cause I always make the time in mind. I take the one out cause I'm patient like that, and I'll wait for the right time. I sell when it's high, I buy when it's low. They call me rich, they call me smart. I'm just a rainmaker running the show. Calculated investments, I don't leave with my heart. The principles are simple, they're leaving a mark. Why when it's boring, just gotta be smart. I sell when it's hype, like all the channels they pump it. That's when I was selling, go parabolic and dump it. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love, and I follow what I learn, not relying on luck. Time is never better, the time like the present. The next 5 years is a gift and it's feeling like heaven. I'm committed to learn, studying to know that nothing comes easy, but with knowledge the game show. Sticking at this road, cause soon will come a bear market. Learning and growing, and when it's slow will be the target. They say it's come out, Bitcoin is dead. The massive decreases can get to your head. Sticking around, the time is better. I'm strong like that, I'll let the others be fretters. 2 years time, the ball will bring back the gains. That makes it worth the effort, cause here comes the rain. So let's go rainmakers, let's make it all happen. Let go of the hate, say the haters be crapping. I'm here for 5 years, let's do this together. The time is right, the time could be better. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love, and I follow what I learn, not relying on luck. Haters be hating, the time to slow down, addressing what they say when I'm wearing my crown. They're chasing green candles like someone who was new. I got a vision that was bigger, helping me to push through. I'm still human and sometimes it is rough, and that's what makes me special, simply I stay tough. Cause I'm a rainmaker, investments I love, and I follow what I learn, not relying on luck.